Welcome back to the deep dive. So when we analyze the sheer, just the almost unbelievable pace of generative AI,
Right, the large language models, the data center expansion.
all of it, the trillions of dollars in promised productivity, the conversation, it inevitably focuses on one singular component, doesn't it? The GPU.
It's always NVIDIA, their chips, their ecosystem, their, massive valuation.
Exactly. But if you look really closely at the architecture of these huge systems,
Yeah.
what if the enduring bottleneck to this whole AI revolution, what if it isn't the processing speed?
But the memory that feeds the processor.
The memory itself. The industry even has a name for it. Call it the memory wall.
And that's the critical premise we're starting with today. For you, the learner tuning in, we're really moving beyond the headlines that, they obsess over teraflops.
Right.
And we're diving deep into the infrastructure that actually lets those teraflops do their work. We've synthesized a comprehensive investment analysis, and it's focused on SK Hynix.
The South Korean semiconductor giant.
The very one. A company that just a few years ago was, let's be honest, it was just another cyclical commodity player.
So our mission today is to really understand the velocity and audacity of this company's transformation. We want to know how SK Hynix managed to fundamentally reinvent itself, moving away from being that typical volatile supplier, the kind that just gets hammered every time there's a slight inventory surplus.
Right, the boom and bust cycle.
To becoming a critical, high-margin, indispensable infrastructure partner.
Yeah.
They are effectively printing money in the generative AI space.
And here is the big picture takeaway, the thesis we're arguing for you today. SK Hynix made a calculated, decade-long strategic bet on a very specialized type of memory.
High bandwidth memory, HBM.
HBM. And this strategic gamble, it paid off to such an extent that they now hold a dominant market share in it. They're achieving a staggering 47% operating margin.
Which is a figure just unheard of for a memory manufacturer.
Completely. And they're effectively sold out on capacity through the entire year of 2026.
Wow.
So yeah, this is no longer a commodity story influenced by, how many smartphones get sold. It's a foundational AI technology and infrastructure story.
Okay, so let's start at the beginning of that structural shift, because it all begins with the architectural problem, the memory wall. Can you explain exactly what that is and why the standard memory we're all familiar with, DDR memory, why did it just become obsolete for large-scale AI?
The memory wall is really a metaphor for a fundamental mismatch. Think of it this way. Over the last decade, processor speeds, the computational engine of the GPU, they've accelerated exponentially, roughly Moore's law.
Right.
But the rate at which memory could deliver data to those processors, the bandwidth, it lagged severely.
It just couldn't keep up.
Not even close. So when you're training a massive model like GPT-4, you need the GPU to access trillions of parameters simultaneously, instantly. If that GPU has to spend even a microsecond waiting for data to travel from standard memory to the processor core,
You're wasting time.
you're wasting maybe billions of dollars of incredibly expensive processing time. That waiting, that's the wall. And it became the absolute limiting factor in AI performance.
So if standard DDR memory is like a suburban two-lane highway, the solution needed to be a total paradigm shift.
It had to be.
And that shift was high bandwidth memory, HBM.
Precisely. HBM is a radical engineering solution. Instead of, laying memory chips flat on a big circuit board, which forces data to travel these long, slow distances,
Right.
the chips are stacked vertically, one on top of the other, often 8, 12, even 16 layers high. It's a 3D architecture.
And crucially, these chips are interconnected by thousands of, what do they call? Through silicon vias, TSVs.
TSVs. And we should pause on those because this is where the physics of the problem and the solution really become apparent.
Okay, through silicon vias. It sounds simple enough as a description, but what is the actual physical challenge here? What are they doing in the factory?
TSVs are both the magic and the constraint of HBM. They're essentially microscopic high-speed vertical tunnels. Think of them like plated copper columns that are punched straight through the silicon wafer itself.
We're talking about tunnels thinner than a human hair.
Thinner than a human hair, and you have thousands of them per single memory die. The challenge is just immense. You have to drill these high aspect ratio holes, insulate them, fill them with conductive material. And this is the most critical part. Ensure that when you stack 8 of these wafers,
All those thousands of little tunnels have to line up perfectly.
with the corresponding vias on the layer above and the layer below it. The precision required is, it's insane.
Any slight misalignment, any imperfection in the plating, and the whole stack is just It's a bust.
Exactly. The whole thing is useless. And this is where SK Hynix made its strategic decision. They focused aggressively on refining this incredibly complex, high-yield stacking and packaging process, and they did it early on.
Well, they're competitors.
While competitors like Samsung and Micron, they were initially focused on just refining standard DDR5 for mainstream servers. They saw HBM as, a niche product. For supercomputing, maybe?
But SK Hynix saw the memory wall coming.
They saw it coming, and they decided they were going to be the ones to knock it down.
What's remarkable is the downstream economic impact of that. I mean, this move immediately transforms memory from that volume-based commodity game.
Right, where the lowest cost per gigabyte wins.
Exactly. It turns it into a specialized performance game, where raw bandwidth and reliability are the only metrics that matter to the hyperscaler who's spending billions on GPUs.
That transformation, that is the structural change driving this current supercycle. SK Hynix's bet gave it a durable competitive advantage, one with very high switching costs for customers like NVIDIA.
And this structural shift brings us directly to the physics behind the current supply crunch. The die penalty.
The die penalty, yes.
Yes. For our listener, this is one of the most counterintuitive and financially critical insights from our source material. It explains why SK Hynix's success in HBM is actually causing global structural support for all memory prices. So walk us through the mechanics here.
It boils down to precious cleanroom space and the physical allocation of silicon wafers. As we discussed, making HBM is incredibly wafer-intensive. There are two reasons for this. First, the HBM die itself is just physically larger than a standard DDR5 die, mostly to accommodate all the peripheral circuitry you need for the TSV interconnects.
So you just get fewer chips per wafer to begin with.
Fewer dies per wafer, correct.
Yeah.
And second, and this is more important, the back-end processing. The stacking, the drilling, the alignment of the TSVs. It causes yield losses, and it takes up significantly more time on very expensive fabrication equipment.
So the wafer stays in the factory longer and at the end produces fewer functional chips.
Precisely. Our sources indicate that industry-wide, due to these larger die sizes and the yield penalties, for every 1 bit of HBM produced, the industry sacrifices approximately 3 bits of standard commodity DRAM capacity.
A 3-to-1 capacity cannibalization ratio. That's staggering. It sounds like a catastrophic level of inefficiency.
It does, but it's an intended consequence if you're selling that 1 unit of HBM at, say, a 4 or 5 times price premium over the 3 units of commodity DRAM you just gave up.
It creates a tremendous economic multiplier.
It does, and this die penalty creates a zero-sum capacity conflict within the big 3 fabs, SK Hynix, Samsung, and Micron. They have a finite amount of cleanroom space. So as they rapidly reallocate their precious wafer starts and equipment time to the high-margin HBM that NVIDIA needs,
they are inadvertently, or maybe intentionally, strangling the global supply of standard DDR5.
Exactly. The memory used in regular servers, PCs, consumer electronics, it's just not being made in the same quantities anymore.
This means SK Hynix benefits from 2 powerful tailwinds at the same time. They get premium, high-margin pricing on their HBM, and they also benefit from this induced scarcity, which drives up the prices of all their legacy DDR5 and DDR4 inventory.
It's operational leverage that's literally based on physics. This isn't simple demand pull inflation for the old chips. It's a profound supply push inflation driven by the manufacturing constraints of HBM.
So the structural support for DRAM pricing is far more durable than in past cycles.
Absolutely. The economics are undeniable. Even if consumer demand for PCs stays soft, DRAM prices are structurally supported because the clean rooms have literally stopped producing enough of the commodity supply.
Let me challenge that point, though. If the opportunity cost of making HBM is that high 3-to-1, what happens if the AI boom slows down in, say, 2027, like the bears predict? Does that capacity immediately flood back into the DDR market and just crash prices? Maybe even harder because everyone pivoted so aggressively?
That's the classic cyclical risk, and it's a fair question. But the structural argument suggests the crash will be shallower, or at least postponed. First, the AI capacity being installed today, H100s, H200s, Blackwell, it's going to need replacement and refresh cycles. So HBM demand remains high even if growth slows.
Oh, yeah.
Second, the pivot is hard to reverse quickly. Retooling a cleanroom line back from complex HBM processing to standard DDR, it's not instantaneous. It involves requalifying a lot of equipment and processes.
Takes time.
And third, and this is maybe the most critical point, the source material indicates that conventional DRAM contract prices are forecast to rise dramatically.
By how much?
By 45% to 50%, with server DRAM prices rising by over 60% in Q1 2026 alone.
Wow. So that confirms the scarcity is real and it's already baked into future contracts.
It is. They have strategically found a way to decouple their high-end product from the standard cycle and at the same time use the manufacturing constraints of that high-end product to artificially support the pricing of their low-end commodity. It's a defining strategic shift for the entire memory industry.
So the story so far has established that SK Hynix made the right architectural bet on HBM. But, as we know in the semiconductor world, making the right bet on a category, it's not enough. You have to execute.
You have to execute.
And SK Hynix's leadership isn't just about making HBM, it's about how they put it together. If the 3D stacking is the solution, the packaging technology is the true competitive moat.
This is the core of your durable advantage. The packaging process, the actual method of stacking, bonding, and securing those layers of memory, that is the current technological bottleneck for the entire AI supply chain. And SK Hynix perfected a process called, well, it's a dense acronym, MR-MUF.
MR-MUF. Okay, let's dedicate some time to this. Let's contrast it with the competitor standard, which was TCNCF.
TCNCF. And the difference is, well, it's night and day in terms of thermal stability and throughput. Let's look at the competitor's approach first. TCNCF. This uses a thin, non-conductive film placed between each layer of DRAM. Now, to bond these layers, you have to apply focused heat and immense pressure to each layer individually, one after the other, to create the connection and secure the stack.
So it's a sequential process, layer by layer.
Exactly. And that is inherently slow and just fraught with stability issues, especially as you increase the stack heights to 12 layers for HBM3 or 16 for the future HBM4.
Why do multiple heat and pressure cycles cause so many problems?
Two main reasons. First is warpage. When you heat, cool individual layers repeatedly, you introduce thermal stress and distortion. That can lead to misalignment of those critical through-silicon vias.
So a slight warp at layer 5 means layer 6, 7, and 8 won't connect properly.
They won't connect cleanly, no. And second, speed. Having to apply the bond sequentially, one layer at a time, it just crushes your manufacturing throughput.
And SK Hynix's MR-MUF approach.
Yeah.
It sidesteps these problems. How does that mass reflow change the physics?
With MR-MUF, they take the entire stack of chips, the 8 or 12 layers, and they bond the TSVs simultaneously using a method called mass reflow. Then, crucially, after that initial connection, they inject a specialized liquid protective material, the underfill, between all the layers and around the stack.
Oh, okay.
And then they cure the entire assembly in one single synchronized heating process.
So instead of heating and pressurizing 12 times in a row, you stack 12 layers and then cure them just once. That has have massive implications for throughput and yield stability.
It's the definition of efficiency and high-volume precision manufacturing. Our sources report that SK Hynix achieved stable production yields of nearly 80% on HBM3E using the MR-MUF process.
80%.
And that stability is the defining factor for volume capacity and predictability. And it directly relates to the performance benefit.
Okay, let's talk about performance. I mean, when you're running a massive AI training cluster, these chips are running 24/7, often at their absolute thermal limit. How does MR-MUF help with heat?
Thermal management is non-negotiable for NVIDIA. It's everything. Because the liquid underfill material in the MR-MUF process fills every microgap and void more effectively than the thin film in TCNCF, it acts as a superior thermal conductor, a heat sink.
I see.
It creates a highly uniform path for heat to dissipate away from the sensitive DRAM stacks and into the package.
And if the heat management is bad?
The GPU throttles its clock speed to prevent overheating and performance, the entire point of the $30,000 chip crashes. MR-MUF gave SK Hynix an immediate measurable advantage in reliable, high-power operation.
So yield stability plus superior thermal performance equals one critical strategic outcome. NVIDIA lock-in.
Absolutely. This technological moat is what allowed SK Hynix to become the sole supplier for NVIDIA's critical initial H100 ramp. When NVIDIA needed guaranteed volume for their most demanding product, they had to go with the company that could prove stable, high-yield manufacturing.
Which was SK Hynix, using MR-MUF.
It was. And they have retained that majority share, that incumbency advantage, for the later architectures like H200 and the upcoming Blackwell generation because they simply delivered when no one else could.
That initial delivery locks them in. I mean, once NVIDIA's process flow is qualified around SK Hynix's specific HBM stack, its thickness, its thermal profile, the cost and time to switch to a competitor's incompatible stack, it becomes prohibitively high.
It creates a supply partnership, not just a supplier relationship. And we can quantify this dominance. As of late 2025, SK Hynix commands an estimated 52% to 62% share of the global HBM market.
52 to 62%.
That's almost double their nearest rival, Samsung, who is estimated at roughly 30 to 38%, and Micron is sitting at about 10 to 20%.
That level of concentration has to make NVIDIA nervous, though. I mean, given that dependence, what's their counter strategy? Are they actively trying to bring Samsung or Micron up to scale just to create some competitive tension?
Oh, they absolutely are. But scaling HBM is not trivial. You can see NVIDIA's efforts in the qualification processes for HBM3E. They're working meticulously with all three suppliers.
Right.
However, the sheer volume they need for the H100, and especially the Blackwell ramp, means they need reliable, high-yield supply today. They can't afford to let their GPU production be bottlenecked by a memory supplier that can only hit 50% yield.
So the MRMUF advantage remains crucial. It guarantees the volume.
And volume is what matters most to NVIDIA's multi-billion-dollar roadmap.
And the certainty this gives SK Hynix is incredible. In an industry that is notoriously famous for inventory swings and boom-bust cycles, they've achieved unprecedented visibility.
Yes, management has confirmed full customer demand visibility for 2026. The capacity is, in their words, effectively sold out through the end of next year.
Just think about that. In the memory world, where you usually live quarter to quarter, planning your CapEx based on a forecast maybe 18 months out,
to have guaranteed demand through 2026 is an unprecedented level of certainty. It just underscores their indispensable role in the AI build-out. They're selling infrastructure, not chips.
The story so far has focused almost entirely on HBM, which is essential for that initial, incredibly demanding AI training phase.
The crunching of massive foundational models.
Right. But AI, once it's trained, it needs to be used in the real world.
Right.
That's the inference phase.
The actual running of the model by end users.
And that requires a completely different type of memory architecture.
That transition is exactly why SK Hynix is not just a one-trick pony relying on HBM. This is where their second engine comes in, providing diversification. The shift to inference demands massive high-speed storage pools to efficiently feed data into the GPUs. Hard disk drives are out of the question. Too slow, and standard consumer SSDs just don't have the density or reliability.
And this brings us to the fascinating and initially very troubling story of Solidigm. We're talking about SK Hynix's $9 billion acquisition of Intel's NAND flash business, which they completed just as the memory market hit a massive cyclical downturn in 2022-2023.
The timing looked terrible. The initial market reaction was deep skepticism, and, rightly so. SK Hynix took on massive debt for the acquisition right before demand evaporated. For 2 years, Solidigm was widely viewed as a financial burden, a massive drag on the balance sheet.
It was seen as a poorly timed play for volume in a sinking market.
It was. But the AI inference boom has completely flipped that narrative. It's transformed Solidigm into a profit center by late 2025.
What changed in the data center demand landscape to make Solidigm a strategic asset literally overnight?
It was the nature of the data being used for inference. When an AI application is running, it needs rapid access to enormous amounts of high-speed storage to retrieve the model weights, contextual data, all that supporting information.
Right.
This requires storage pools that prioritize density, power efficiency, and crucially, read speed and reliability, not constant write endurance.
And that plays perfectly into Solidigm's specialization. Quad-level cell NAND, QLC.
Exactly. QLC NAND stores 4 bits of data per memory cell, giving it the highest density in the market. Historically, QLC was seen as less durable and slower than TLC NAND, which stores 3 bits per cell. But Solidigm developed and retained Intel's specific NAND architecture, the floating gate architecture.
And that provides superior data reliability.
It does, compared to the more common charge trap flash used by competitors.
That distinction is key. Why does the floating gate architecture matter so much for inference?
It boils down to data retention and long-term reliability in a very dense environment. QLC stores 4 bits, so the voltage difference between states is tiny. If that voltage drifts, you get a read error.
I see.
Solidigm's floating gate design is inherently more resistant to that charge leakage. So their QLC drives, while they might not handle the extreme write endurance needed for initial training, are perfectly suited for the read-intensive, high-density inference workloads.
They offer the best balance of density and reliability for this specific application.
They do.
So we're talking about massive data pools where the hyperscalers, Google, Amazon, Microsoft, are battling to minimize two things: physical footprint and energy consumption.
And that's where the density of Solidigm's QLC becomes a huge cost saver.
It creates a monopolistic niche.
It does. Solidigm is currently the only major player supplying these ultra-high-density enterprise SSDs at scale. We're talking about 60 terabyte drives and soon 122 terabyte drives.
Wow.
These massive drives allow hyperscalers to store enormous petabyte-scale data sets in a fraction of the physical rack space, which dramatically reduces energy costs for cooling and power. They provide a high-speed, cost-effective backbone for the inference market.
Let me push back slightly on the reliability aspect, though.
Yeah.
If QLC is storing 4 bits per cell, even with the superior architecture, isn't there still a concern that these massive data sets could suffer integrity issues?
That's a valid concern, and historically it was the biggest hurdle for QLC adoption. However, for inference workloads, the models are read maybe 10,000 times for every one time they're written or updated. The life cycle is fundamentally different from a database server constantly logging transactions.
Okay.
Solidigm's drives are optimized for deep, reliable reads. They leverage advanced error correction to compensate for the tighter voltage tolerances. The fact that the hyperscalers are adopting these 60 TB plus drives at scale confirms that the cost savings on power and footprint,
Combined with the reliability?
it outweighs the historical endurance concerns.
So the NAND business, which was a strategic liability 2 years ago, has now surged in profitability.
Yes, with ESSD sales driving significant margin expansion for their non-DRAM division.
This means if the HBM training capex were to slow down slightly, SK Hynix has a massive, rapidly expanding hedge in the inference market.
It provides essential resilience. We're looking at a total memory market projected to reach nearly $200 billion in 2025. While HBM is the high-growth, high-margin driver, the inference side is the volume and stability driver. This positioning dominant in high-bandwidth training and essential in high-capacity inference, it moves SK Hynix firmly away from that typical 18-month memory cycle volatility.
They are now structurally positioned for long-term growth across the entire AI technology stack. Okay, let's pull back and review the sheer financial outcome of these two strategic bets, HBM dominance and the Solidigm turnaround. Because the transformation over the last 2 years is stunning. They've gone from deep operating losses during the 2023 trough to unprecedented profitability.
The velocity of the turnaround is what separates this cycle from previous ones. I mean, looking at the financials from the trough of 2023, where they were posting multi-trillion-won losses,
Right.
to the Q3 2025 results, it highlights their new reality. For Q3 2025, they reported record-breaking revenues of KRW 24.45 trillion, but more critically, the operating profit, the pure profit from core operations, was KRW at 11.38 trillion.
And that leads us to the figure that forces everyone in the industry to pay attention: the 47% operating margin.
47%. This is a staggering metric for a hardware manufacturer, especially one historically burdened with that commodity player label.
We have to look at the historical context to really get the magnitude.
You do. During the peak of previous memory supercycles, say 2017 or 2018, SK Hynix's operating margins typically peaked around 25 to 30%.
So hitting 47% not only exceeds their historical norms by nearly half, but it also outpaces their major rivals.
It puts them squarely into what analysts call foundry-like margins. These are margins traditionally reserved for highly specialized monopolistic chip manufacturers like TSMC,
who often operate at 50 to 60% margins.
Exactly. Hynix is running 47%, which is superior to Samsung's projected semiconductor division margins of around 40% and Micron's projections of 35 to 40%. It confirms the fundamental point.
They're being paid a massive quality premium for specialized technology, not just for volume.
Correct. And since HBM accounts for over 30 to 40% of their DRAM revenue, that segment is clearly driving this exponential profitability.
The cost structure must be extraordinarily favorable.
It confirms that the capacity cannibalization is working perfectly for them financially. They're selling a highly constrained, mission-critical product at extremely high prices, and the cost basis, while complex, allows for these enormous margins.
So the market needs to value them more like a specialty logic supplier, like TSMC.
And not a volatile commodity broker.
Beyond the income statement, the balance sheet health is equally important, especially with the history of the Solidigm debt. Where do they stand on cash reserves?
The rapid, massive cash flow has quickly repaired the balance sheet. They've paid down substantial portions of the acquisition debt and have now transitioned into a net cash position of KRW 3.8 trillion.
That's a critical milestone, both psychologically and operationally.
It is. Memory manufacturing is perhaps the most capital-intensive sector in tech. You need immense reserves for future capex. Rebuilding that net cash position gives them the firepower they need for HBM4 and beyond.
And this leads directly to a change in management philosophy, right?
Mm-hmm.
Historically, memory companies pursued market share at all costs.
Not anymore. Management has publicly communicated a significant pivot. They're moving from market share expansion to profitability-oriented operations. And you see this discipline in their CapEx strategy. Investment is heavily skewed toward advanced packaging and migrating to the highest memory nodes.
But crucially, they're intentionally not expanding capacity for legacy DDR4.
Which is a fascinating self-fulfilling strategy. By limiting legacy CapEx, they're sustaining the supply constraints created by the die penalty.
Keeping prices high across their entire portfolio.
It shows structural confidence. They're willing to sacrifice volume in low-margin segments to guarantee stability in their high-margin ones. Furthermore, they're addressing the historical corporate governance criticisms, the Korea discount. They've increased the fixed annual dividend by 25% and pledged to return 5% of their free cash flow to shareholders.
So this brings us to the financial paradox, the valuation arbitrage. If they're outperforming their peers, why does the market value them so cheaply relative to their U.S. rivals?
It is the single largest point of contention in the investment community. Despite this performance, SK Hynix trades at a massive discount relative to its primary U.S. peer, Micron. The estimated forward PE ratio for SK Hynix for 2026 earnings is only 6.8x to 8.0x.
And how does that compare to Micron?
Micron is trading at a forward PE of 10x to 15x. SK Hynix's EV to EBITDA is around 4.6x to 5.0x. This suggests the market is deeply cynical about the durability of these 47% margins.
So how do we interpret that? Is the market just afraid of the next cyclical crash, ignoring all the structural changes we've discussed?
That's the core of the bear case. It's peak cycle fear. The market is pricing in a catastrophic collapse in earnings in 2027, assuming the AI boom is just a short-lived spike and the old commodity cycles will return with a vengeance.
But the other interpretation is that long-standing, difficult-to-shake Korea discount. Why does that persist even with such fundamental improvements?
The discount is applied due to two main historical factors. First, the geopolitical risk around their concentrated Chinese production facilities, which is a big one we'll analyze next.
Right.
And second, historical concerns over corporate governance, specifically, prioritizing CapEx over shareholder returns. And while they're addressing that now, the market is waiting for years of proof.
So the bull case argues that the fundamentals, the locked-in volume, the tech moat, the foundry-like margins, all dictate that SK Hynix should be valued as an AI infrastructure play, closer to that 10x PE multiple.
Exactly. The valuation is arguing that Hynix is still a commodity broker, but their operating margins are screaming that they are a highly specialized technology leader. This tension is central to the entire investment thesis.
We've established the enormous strengths, but no deep dive is complete without a rigorous look at the downside risks. And the single biggest, most unpredictable risk factor is geopolitical friction, the China overhang.
The exposure is high and the concentration risk is acute. SK Hynix operates massive facilities in China. Specifically, the Wuxi fab produces approximately 40% of the company's total DRAM capacity.
40%?
40%. And they have significant NAND production at the Dalian fab from the Solidigm acquisition.
And this production is vulnerable because advanced chip manufacturing requires continuous upgrades with equipment that falls under U.S. export controls.
It creates perpetual uncertainty. The U.S. government restricts the export of advanced lithography tools to China. Until late 2025, SK Hynix operated under a fairly stable status, but that's been replaced.
By a new perpetual annual licensing regime?
Yes. So while they got a license for 2026, the sword of Damocles hangs over them. Every single year requires a fresh negotiation and is dependent on the volatile U.S.-China relationship.
Let's detail the catastrophe scenario. If the U.S. were to tighten restrictions and revoke that license, what's the immediate outcome for a factory like Wuxi?
The outcome is technological obsolescence. Without the ability to import the latest equipment and, critically, the maintenance and replacement parts, they can't upgrade the fabrication nodes. The factory would be locked into its current technology.
You would just get less and less competitive over time.
Exactly. If they can't upgrade Wuxi, 40% of their global DRAM capacity begins a slow, inevitable decline. That would be catastrophic for their long-term volume position.
So what is management doing to mitigate this dependency?
Their strategy is smart. It's bifurcation. All the advanced HBM production, the high-margin, mission-critical stuff, is concentrated in Korea. in Icheon and Chungju.
Safely outside the primary jurisdiction risk.
Right. The Wuxi fab is being explicitly pivoted toward producing legacy nodes, primarily DDR4, which are still required for things like cars and IoT devices.
The leading edge in Korea, legacy in China strategy.
Exactly. It reduces the risk for their HBM moat, but the annual license renewal for Wuxi remains the single most crucial indicator of geopolitical risk for the entire company.
Moving on to technological risks. The competitive board is set to reset with the next major inflection point, HBM4, expected in 2026. This is where rivals could potentially leapfrog them.
HBM4 is a true architectural inflection point. It fundamentally changes how the memory stack is constructed. The memory stack rests on a crucial component called the logic-based die. For HBM4, this base die will need to be made using an advanced logic process like 12mm or 5mm, not a memory process.
Which instantly means that memory specialists like SK Hynix are forced to partner with specialized logic foundries.
And they have chosen the world's most dominant logic foundry,
TSMC.
They've formed what the source calls a strategic triangular alliance. SK Hynix provides the memory stack and MRMUF packaging. TSMC manufactures the advanced logic-based die and handles the final POWES packaging, and NVIDIA is the integrator.
That three-way partnership creates a formidable barrier to entry.
It does. It's something Samsung, which tries to be vertically integrated, will find difficult to match immediately in terms of yield and efficiency.
The ultimate technical risk, though, the factor that will determine HBM4 leadership, is the bonding debate. The argument over how to connect those 16 layers.
This is the most complex technical gamble in the semiconductor world today. Samsung is making a massive high-risk bet on hybrid bonding.
Direct copper-to-copper connections.
Exactly. Eliminating the need for traditional microbumps. Their claim is that it allows for thinner stacks, higher interconnect density, and superior heat dissipation. If they perfect it quickly, they could theoretically leapfrog SK Hynix.
And what's SK Hynix's approach? Are they matching that gamble?
Their approach is pragmatic. It's focused on execution. The initial 16-layer HBM4 products.
So they're sticking with the proven yield winner.
They are. They're researching hybrid bonding for future generations, HBM4E and beyond. But for the near-term 2026 delivery, they're not taking that risk.
Let me challenge that. Given the potential performance gains of hybrid bonding, isn't SK Hynix being too cautious? If Samsung perfects it, couldn't Hynix lose their advantage instantly?
That is the risk. But the industry has learned that volume and yield trump theoretical performance in the AI market. The failure of TCNCF for early HBM3 proved that process maturity is everything.
So they're prioritizing a guaranteed high-yield product delivery for NVIDIA in 2026.
Over gambling on an unproven technical breakthrough, current evidence suggests that for the initial HBM4 rollout, SK Hynix's pragmatic, lower-risk path is favored by customers who need assured supply.
And finally, the other risks. Their heavy reliance on NVIDIA.
That concentration risk is inescapable. Any stutter in NVIDIA's growth or an aggressive diversification strategy by NVIDIA to bring Samsung or Micron to scale, that would disproportionately impact SK Hynix's high-margin business.
And of course, the overarching fear of a global recession curbing AI capex.
Always present, though their dual exposure to both training and inference provides some buffer.
This has been a deep dive into a company that truly transformed its identity and the architecture of the AI industry in just a few short years. Let's synthesize the major themes for you, the learner.
First, we established that SK Hynix has fundamentally decoupled its fate from the traditional memory commodity cycle. The 3D stacking of HBM is driven by existential AI capex, not fickle consumer demand.
Second, the MRMUF packaging advantage is the durable technological moat. It provides superior thermal performance and production yields, locking in mission-critical customers like NVIDIA due to those massive switching costs.
Third, the die penalty is a structural force supporting all memory prices. The manufacturing physics mean that high-margin HBM capacity cannibalizes 3 times the capacity of commodity DRAM, ensuring standard memory prices remain structurally high.
And fourth, their financial performance is currently superior to its rivals, with that staggering 47% operating margin putting them into foundry-like territory. Yet the stock trades at a deep discount.
To conclude with a final provocative thought for you to carry forward, the source material suggests SK Hynix is not merely riding the AI wave, but is fundamental to the physics of that wave.
The architectural solution to the memory wall.
However, the analysis also revealed that their most critical production capacity, The Wuxi DRAM fab that produces 40% of their DRAM volume is dependent on an annual negotiation with the U.S. government for its operating license.
So if you want to truly understand the geopolitical fragility beneath the seemingly unstoppable AI build-out, the annual license renewal announcement for a factory half a world away is the most important single news item to monitor.
That negotiation holds the key to the continuity of 40% of SK Hynix's DRAM supply.
A technological triumph resting moment by moment on a political tightrope.
That tension is the definition of the modern supply chain.
Always a pleasure to unpack the complexity hidden beneath the surface. That's it for this deep dive. We'll see you next time.